You're watching Traders Corner, Summit TV's exclusive trading show in which seasoned trader Garth McKenzie runs a real-life, real-time portfolio. Garth is with me in studio. He's founder and editor of traderscorner.co.za. Welcome, Garth.
Hi, Erica.
I haven't spoken to you on the show for some time. Now, I remember this was a portfolio of 250,000 Rand. At the end, you're going to tell us what it's worth, but I can't wait for that long. It's up 41% since the year began.
Yeah, that's right. We are 41% from where we started. We are up to 351,000 Rand now, so 101,000 Rand profit for the year to date, and all of that's going to charity. It's only July, so we've still got quite a few months left of the show. So it's been fantastic so far, and I just hope that we can keep this kind of performance up going out to the end of the year.
It's a proof that you can make money in this market, but with all the belts and braces in place. Garth?
Well, that's it. Yeah, it's always about position sizing and risk management and protecting the losses and stop losses and things like that. But also what I attribute this year's performance to is really that I've played in the right sector of the market, because this year has been a tale of two markets. We've had a bull market in the domestic sectors of the JSE and pretty much a bear market in the resources sector. And so if you've been playing in the resources sector, it's been tough going. If you've been playing in the domestic sector, you've had a good time. And that's where we've made most of the money. We've done well in stocks like Aspen and Naspers and Remgro and Brait and a couple of others. So, and all of those are in the domestic space.
Yes.
And that's where the strength and the momentum has really been in our market. And it still is that's still the case for the time being anyway.
And most of those examples are strong because you've got foreign investors coming here looking for those defensive plays to boost their portfolio returns.
Yes, correct. Yeah, so the trends have been up in all of those stocks. The momentum has been with those sectors of the market. So it's really been a case this year of getting on board that momentum and timing our entries correctly, and then obviously overlaying each of those trades with a careful risk management and money management strategy.
So for the time being, you see this continuing to be a two-tier market. You still steering clear of resources?
For the moment, yes. I'm sure it's not going to stay this way forever. At some time, eventually, resources will have their day in the sun again. But I think what it's really going to require is global economic growth to pick up. And at the moment, there's no sign of that. I mean, we've seen the IMF downgrading world economic growth over the last day or so. So I just think that for the time being, there still is headwinds in place for the resources sector, and that is still a weak area of the market, whereas the domestic sectors are fairly strong. But obviously it's not going to stay that way forever, and we'll need to address it. As we do, we trade what we see on this show, and when we see things starting to change, when we see the momentum starting to shift back in the favour of the resources, then I'll look to play in that sector. But for the time being, I still favour the industrials and the financials.
Let's revisit your last trade. That was 2 weeks ago when you bought Naspers. How's that faring? Was it a good choice?
Yeah, it's doing fine for us. The graph of Naspers is up on the screen at the moment. And if you have a look at it, what I said at the time was that this stock has been in a nice strong uptrend for most of this year, but it seems to have now gone into a sideways trading range. And I identify that there with the bottom of that trading range now being at 430 Rand, and then the top of that trading range at about 475. Regular viewers of the show will recall that we still do have an open trade on Naspers from much earlier in the year, from around about March sometime, which we bought in at about 410 Rand, and I've still got that trade open. But we did this extra trade in Naspers 2 weeks ago, and what I did at the time was I bought, it says 5,000, it was actually 500 CFDs, down at the bottom of that trading range at 437.50 with a stop loss at 427 Rand. And what I want to just point out there is you can see the risk to reward ratio illustrated by the red block and the green block. The red block is basically the risk from our entry price down to our stop loss, and the reward is the green block. It shows from our entry price up to the top of that trading range, which is what I perceive to be the potential reward in this trade. So we're still sitting with it. It's still working out fine for us. And I still believe that there's a chance that we're going to go back up and test the top of the trading range here on Naspers. So I'm happy to sit tight with this one.
At ease, feeling patient about Naspers?
I think you've got to be patient all around in this market at the moment. It's been a bit tough going, especially the last week. We've had very, very thin volumes, and it's been a bit frustrating. So patience certainly is the name of the game at the moment.
Right, so you said you're going for domestic players. What's your new trade for this week?
Yeah, this week I'm having a look at Imperial. And what really excited me about it was when I was looking through my graphs the other day, I had a look at the long-term chart of the stock, and I realized that it's actually breaking out above very, very long-term resistance. If you have a look at the graph on the screen at the moment, you can see this chart, it goes all the way back to 2006. So we're looking at about
Gosh, I wasn't born then.
We're looking at about 6 years of trading history. And if you have a look, there's a big overhead resistance line there at 175 Rand. And we've just recently popped up above that resistance now in the last couple of weeks. So what I want to do is, we're not going to base a trade entirely off this long-term chart. I also want to look at a shorter-term graph. And that rectangular area that I've highlighted there on the chart, I'm going to now zoom in on and have a look. And that basically shows us the last 3 or 4 months worth of trading history in Imperial. And I like it from this perspective. If you look at that, you can see there's the resistance at 175 Rand, which goes back to 2006 that I spoke about. And you can see that in the beginning of July, we broke up above that resistance. And we've been coming back down to an uptrend which goes back around about 2 months. And this consolidation that's been happening over the last couple of weeks is taking the form of what we call a bull flag formation. Now, a bull flag typically happens in an upward trend. It's a continuation pattern consolidation within an uptrend, and usually they break out to the upside. So I'm taking a bet that that's what's going to happen here, based on the fact that it is a high probability formation. These patterns have about a 65% success rate based on historical testing. So I like it. I like the fact that the stock is making new highs. I like the fact that it's made a very controlled consolidation over the last 2 weeks or so. And I do believe that we probably got the backdrop for a break to the upside here. And that break would probably take us to about 190 Rand as a projected target based on that bull flag structure.
Let me ask you a question. It's not a technical question, I don't think. Are foreigners buying Imperial? Is that one of the reasons why there's this movement?
Well, I think that they are active in that space. I mean, foreigners and local investors as well. But we've certainly seen a lot of foreign involvement in the domestic sector of our market. They are searching for yield. They are searching for somewhat defensive plays. And they're not getting that in their overseas markets. So they have been coming to some of the emerging markets to get this type of exposure and to get that extra yield enhancement. So I think, yes, the foreigners have been active in this space.
So reading the technicals, you're comfortable it's going to continue?
Well, I'm comfortable. I believe that. Look, I don't know anything with 100% certainty. That's why we always overlay all our trades here with the risk management and money management strategy. If I knew with 100% certainty, I'd gear I'd gear our portfolio to the hilt,
yes,
and go all in. But of course, we never know that. We never have 100% certainty with any of the trades we do on this show. So that's why we take a conservative approach. We risk 2% of our capital. If it goes wrong, we lose 2% of our money. It's not the end of the world. But if it goes right, then hopefully we can get a decent risk to reward ratio. So what I've done this week is I've bought for the portfolio at 178 Rand, and I'm using a stop loss here as a move below 173 Rand, because that would then invalidate everything I'm talking about here. It would be a break back down below that 175 area, and it would invalidate the bull flag pattern, etc. So I sent this out to Traders Corner subscribers yesterday, and I also sent out a tweet on Twitter to highlight the analysis which I'd done here, mentioned that we'd be talking about it on the show this week. So I've done it for the TV show, and once again I just want to show that the red and green blocks there once again illustrates the risk to reward ratio of the trade. So the red block indicates the amount of potential risk from our entry at 178 down to our stop loss at 173, and then the green block is our possible reward from our entry all the way up to the projected target of 190 Rand. So that's what I've done for the portfolio this week.
So again, putting all the systems in place so that your exposure is not too big, your gearing is not too much. Let me ask you a question. Just apologies to viewers because I'm not a trader. What does it cost you, aside from that amount that you lose, the entry price versus the price below which it falls? Aside from that, what does that transaction cost you as a trader? Well,
we're trading CFDs, contracts for difference, here on this TV show. We pay 30 basis points at 0.3% of the notional value of a trade. On all the trades that we're doing here. That is more or less the standard cost to trade CFDs. You can get them cheaper, or sometimes some people pay a little bit more, but I think the industry standard now is more or less 30 basis points, and that's what we're paying on this show for all the trades that we do, all our CFD trades.
Right. Yeah, so that was the structure of your Imperial trade for this week, and the amount of risk that you're taking on. So,
yeah.
Giving us more here.
Yeah, I want to just quickly go through the mechanics of the trade here. So we're buying it at 178 Rand, as I mentioned. The stop loss is 173. So what that means is that I'm risking 5 Rand per share here. I'm going to risk 2% of our capital on this. So we've got 351,000 Rand at our disposal now. So 2% of that is 7,020 Rand. So that's what I'll put on risk. That's what I can potentially lose if the trade goes wrong and it hits the stop loss. So I always take the calculation that I've got up here to calculate our position size. We divide the portfolio risk divided by the risk per share, and that gives me 1,404 shares. So I'm going to round it off, and I'm going to do 1,400 CFDs. Remember that every one CFD represents one share. So that's what I've done for this week. And just a little add-on, I've got the target there at 190 Rand. So what that means is that our risk to reward ratio for this trade is 1 to 2,4. Which is decent enough in my eyes.
And to ask you then, if that's the target, you will sell, you will close the structure at that point if it reaches 190?
I'll close out. I'll probably close the whole position at 190. Having said that, though, for viewers that want to follow this and have a more medium-term outlook, I think this chart looks very bullish, and I think there's probably more legs than 190 in it. But as a short-term trader here, I'm going to look to take a profit at 190 if it gets there.
So what does this mean for the entire portfolio? How's that looking in context?
It's looking good. There are the recent trades that we've done on the show. The Imperial that I've just discussed is now open. We've got our Naspers trade where we've got a mark-to-market profit of 2,500 Rand on that one. A couple of other trades which we've closed out, Goldfields, Woolworths and New Gold over the past month or two. And then we've also got a much older trade in Naspers which is still open. We've got half a position open from 409 Rand 66, and there we're running a mark-to-market profit on that trade as well. So putting it all together, the portfolio is sitting at 351,000 Rand now, so it's up 41% for the year to date.
Perhaps reminding you of bad times, but just to point out the loss that you made there on Goldfields and New Gold, I think illustrating your point about the risk that one takes by trading in resources.
Yes, well that's right, and I know when I was quizzed by Julieta on those trades, I said that probably we should leave the gold shares to the Roffie review because that seems to be where they have a very happy home. On Traders Corner we've been doing well out of financials and industrials this year, and that's probably where I should keep my focus for the time being. Yes. And obviously a little lesson learned there on both of those gold exposures.
I know it's at least a week too early to ask you, but for next week, what are you working on at this stage? We know it's going to be a local industrial stock probably. Potentially,
but I have no idea. The markets are so dynamic that I can't say with one week ahead what's
so you take it day by day?
Absolutely. The markets change day by day. As a short-term trader, I have no idea where the market's going to be next week, so I'll take it day by day.
So Garth, how can viewers get hold of you?
Alright, well, they can get hold of me, there's my email address, and if they want to attend the next high probability trading course, which is on the 18th of August, they can get in touch with me. There's my email, garth@traderscorner.co.za. I'm also on Twitter and also on Facebook, so you can get hold of me on one of those three mediums.
So there you go, Garth is extremely accessible, and his trade this evening for this week is Imperial, and having still emphasized that he's comfortable with his Naspers trade. Just final words from you, Garth. Courage for this week for the market?
Well, I think this week is likely to be somewhat back-end loaded in terms of the excitement. It's been a very slow start to the week, but we've got Bernanke speaking this evening, and we've got some extra data coming out later in the week, and we're going to get into the thick of the earnings season in the US towards the end of this week. So I think maybe we'll see a little bit more excitement towards the end of the week. Certainly Monday and Tuesday have been rather dull days on the market, so I hope the activity does pick up a little bit as the week unfolds.
Garth, thank you very much. You've been watching Traders Corner with Garth McKenzie on Summit TV. Back with you next week. In the meantime, you can chart Garth's progress on traderscorner.co.za.